Welcome, everyone, to the second episode of Sullivan and Cromwell's Trading and Markets podcast. I am Ryne Miller, your humble host, and I am a partner in Sullivan and Cromwell's New York office. I'm the co-head of our Commodities, Futures, and Derivatives practice. Thanks very much to everyone that tuned in to our first episode in January. We got a lot of good feedback. It was great to hear from some folks that we haven't heard from in a while. We did a short 10-minute Q&A session with Sullivan and Cromwell's Jamie McDonald. In the first episode, Jamie and I went through some of his thoughts on his experiences at the CFTC and his role as enforcement director, and he and I both offered some perspectives on where CFTC enforcement might be going in the coming year. So that episode is available on Sullivan and Cromwell's website. It's also up on most podcast hosting services. For anybody that wants to listen, feel free. And if you've got feedback or comments, we're always open to those. Today, I am really excited to be joined by another special guest, Steve Peikin. Steve leads Sullivan and Cromwell's Securities and Commodities investigations and enforcement practice. And as many of our listeners will know, Steve recently completed a term as CoDirector of Enforcement at the Securities and Exchange Commission. Now back at S&C, Steve continues a long-standing practice advising clients through investigations and enforcement matters by the SEC, CFTC, Department of Justice, and pretty much any other regulatory authority that might show up and knock on the door. Steve, welcome to the podcast.
Thanks, Ryan. I'm very happy to be here, and I feel fortunate to have had the opportunity during my career to sort of rotate between government and private practice. I spent a big chunk of my first part of my career at the U.S. Attorney's Office here in Manhattan, where I spent a lot of time doing securities and commodities cases, left as chief of the securities fraud unit, and then had a great 13-year experience at Sullivan and Cromwell doing a defense practice, an enforcement practice, and then had the privilege to go back into government, help run the enforcement division under Chairman Clayton. So thanks for including me in this podcast, Ron.
Thank you, Steve. So let's get into our discussion. Steve, one item I definitely want to cover that I've heard folks ask me about is, let's reflect on, or have you reflect on, some of your experiences as co-director of the SEC's Division of Enforcement. I know you could talk about a number of things there for a long time. I guess let's come at it this way. What did you find interesting or unique, or I guess different from what you might have expected going into that role?
Well, there's a lot I could say on that score. I really had a terrific experience. I learned a tremendous amount. And one thing that I realized after having been there for a little while is the SEC isn't terribly transparent about how its enforcement process works. And I had a lot of learning to do to understand the process and see how an investigation makes its way from its conclusion all the way up to a recommendation to the commission. And some observe that the SEC is bureaucratic in nature. I found, and I was pleasantly surprised, that the processes that the commission follows to ensure that its enforcement recommendations are in the best possible shape before they're presented to the commissions is a robust one, and one that I think inures to the benefit not just of the commission, but to market participants. And so when an investigation is concluded, there is an internal process for its review within the enforcement division. Then the recommendations of the enforcement division are reviewed by the relevant policy divisions, whether it be the Division of Corporation Finance, Division of Trading and Markets, Division of Investment Management, as well as by the General Counsel's Office. And that review results usually in comments that are constructive, sometimes modifications to the enforcement division's recommendations. But I think that the product that is presented to the commission for consideration is a better and, in the main, better thought out and more carefully considered one. Sometimes that takes time, and there's obviously added layers of review, but I think in the main, it's good for the commission and ultimately good for market participants.
Is the divisional review like a seriatim? Are they going around to the operational divisions getting sign-offs, or is it this consultation process? How would you describe that, if you can?
It's pretty much simultaneous, but it can be iterative where it can go back and forth several times. Most cases don't get reviewed by every policy division, only the one that has the most applicable expertise, as well as the General Counsel's Office. And then, of course, those recommendations also get reviewed by all the commissioners and their legal advisors.
Thanks, Steve. So let's go into some of the substantive issues. And looking at the SEC's enforcement program, there really is a wide range of issues. For issuers, obviously, disclosure and periodic reporting-based topics are front and center, but there's so much more, whether it's broker-dealer issues, trading venues, investment advisors, investment companies, even going to FCPA and others. To focus a bit and with a trading and markets lens, what do you see as the major trade conduct issues that the SEC might prioritize from an enforcement perspective?
Well, it's a great question, Ryan, and I think that it has to be answered, with an eye on the chair who's been nominated, Gary Gensler, who obviously has deep markets expertise and probably brings a market-based perspective to the commission. Obviously, I don't know what his particular priorities will be, but my sense is that these issues are likely to be front and center, particularly in light of the recent market volatility that we've observed. But on the trading side, insider trading, has always been a feature of the SEC's enforcement program. A lot of resources are devoted to it, and I think that they will continue to be. Spoofing, layering, and market manipulation, I think, are also a significant priority. The SEC has invested in resources to allow them to analyze large sets of structured data, to identify improper conduct, and then to better investigate it. And I think that those kinds of cases will continue to be a feature.
A question here, Steve. When I think of spoofing and layering, obviously I'm very familiar with the CFTC history and precedent. Am I missing something? My view is the SEC hasn't brought a ton of those cases, or maybe they're just not on my radar.
They have brought a number of them, and there was one such case was litigated to a jury trial in the Southern District of New York just last year. And I think the experience, that was a successful litigation, and I think that experience has probably emboldened, more investigations and potential prosecutions.
Thanks, Steve. Any other trade conduct issues that you think might be on the SEC's priority list?
Well, I think sort of market structure and market access issues are always of interest to the SEC, and so I think you'll continue to see an evaluation of order routing engines, operation and disclosures around dark pools and the like. I think there's a fair amount of expertise at the agency in those spaces, and I think they will continue to be part of the enforcement docket.
Now, shifting a bit, and I think a question that maybe some folks tuning in are probably most focused on or would like to hear your thoughts on, given your current role and your prior roles. We're all watching the nightly news and seeing increasing references to stock trading, day trading, and even market structure issues on the national news. Certainly not something we've historically seen. To the extent you can talk about any of this, I think the question folks have is, how is the SEC going to be thinking about recent events in the equities markets?
Well, we've obviously seen some really unprecedented market volatility in, a relatively narrow band of names. And I think, as most people have observed, it's sort of a combination of the development of low or no cost brokerage services that have resulted in new market participants entering onto the scene, as well as sort of the intersection of social media with those forces. So the SEC, I think you can look at what they've said in the last week or so, and I think that they have suggested that there's going to be a broad review of a wide variety of market participants who intersected with these events. So from the sort of retail investors who have sort of banded together to encourage trading in particular names, to short sellers, some of whom were caught on the wrong side of this trading activity, to the broker-dealers, including some who have placed some limitations on trading of names, as well as the internalizers who have, are the counterparties on many of these trades. So I think all of those folks, are likely to come under review by the SEC. The SEC has also suggested that they're going to look at the activities of some of these issuers to see whether there was appropriate disclosures around any offerings that were made. How that will all play out, I think, remains to be seen. But certainly the SEC has suggested that it's casting a very wide net in terms of what they will look at.
Thanks, Steve. That's really interesting perspective, and hopefully folks are tuning in to listen. I guess the last wild card question, if you're looking at the Washington scene right now, any projections on timeline for when we start to see confirmations of some of the new executive branch chairs, such as the CFTC or the SEC?
So, I don't really know. I obviously think that there's probably some desire in light of recent market events, to have in place, sort of the presidentially nominated commissioners at the various agencies. And I don't know whether that will result in an acceleration of timelines, but I wouldn't be surprised to see it.
Got it. Got it. Well, thanks so much for joining. Thanks to everyone that tuned in. This is the Sullivan and Cromwell Trading and Markets podcast, and we'll look forward to catching up next time. Thanks for listening.